And there you have it. The markets are officially closed on this Wednesday, August 20th. Welcome, investors. This month is flying by, and we had a very interesting start to this week. Many of you may have been tracking some of the forecasts that we put out on the Midweek Report last week. A shout out to Will, thanking him for that MU call. When we looked at the charts, we put a downside target on that. We'll take a look at a couple of those stocks. But with me, I have Nod from NODLive, which is our sticky trade news feed. If you're interested in the NODLive service, just go ahead and you could scan the code that's on this broadcast, or you could go into the chat down there and click on that. We'll also put it in the description box below. Nod, what do you have for us this week? The Fed put out their minutes, and at first the markets reacted in a negative way. Then we saw a rally, and then we wound up with pretty much a big nothing burger, with the exception of the Dow transports being down. The industrials pretty much held their own. What are you seeing on your end?
You took the words out of my mouth, AJ. Good afternoon, everybody, and thank you again for joining us. We do appreciate you taking time out of your day to be with us. With the markets, being pretty flat all around, there sure is a lot going on with the internals, AJ. We often talk about the retail trader, which is you, me, and our members, and versus the institutions. And as we sit, retail investors are buying U.S. equities at a massive amount, whilst the institutional people are selling. So, AJ, check this out. Mom and pop investors purchased $190 billion in U.S. equity ETFs so far in 2025, which is far outpacing last year, all whilst institutional traders have sold $40 billion. So, AJ, with this in mind, and with retail folks still buying what the big guys are selling, can you let me know what you see from this chart, which is some of the largest and most popular ETFs? If you wouldn't mind, I wouldn't mind taking a look at XLF, and then we could talk about the Fed comments again, which were a nothing burger.
Right. Well, there's the old saying of follow the money, and that's exactly what we do when we're looking at a chart. For those who are just joining us, our members have access to the 7-point trading checklist, which is nothing more than a document or a PDF format that shows the price action, the volume behind it, and what the indicators are telling us. And if you look at XLF here, this is the financial sector in the SPDR financial sector. You could see that in this area right here, we have a pretty strong resistance area right at the top. And you could even call that a triple top, maybe even a head and shoulders top. We don't know yet. But if we're talking about head and shoulders, let me bring this down just a little bit so you can see what I'm talking about here. If we're looking at a head and shoulder, we would take this first resistance area as the shoulder. This would be a head, and then the right shoulder is over here, and the neckline would be more or less looking like this. A neckline is taken by more or less connecting the lows of the troughs. Here would be a trough, here would be a trough. Now, this neckline is something that all traders will be watching, especially the option traders. Now, what I find interesting today is that while the Dow was pretty much flatline for the overall performance, we see the XLF ticking up still on higher volume. So it looks to me like the financial sector is going to go up and test this resistance here. If it breaks out, then we got another resistance here. But overall, this whole area is going to be filled with resistance. And if we take a step back and look at the weekly, I'll go 10-year weekly, we're still in an uptrend. There's no doubt about that. But when you're looking at the divergences down below, I got to zoom in a little bit more. We talk about these oscillators showing divergences. The divergences that I point out in the oscillators are not necessarily, oh, we got to go sell it right now. It's basically a signal that we follow to keep us on guard, especially as we're getting into September and October. So what I'm pointing out here in the financial sector is that we have higher highs on the charts, but we have lower lows here. This is more of what they call a megaphone. Most of the time, a megaphone is a topping pattern. But then you look down below and you look at the high here as it correlates to the CCI down below. We see the highs on the CCI are drifting lower. So there you have the negative divergence that we talk about all the time. Now, I wouldn't necessarily be taking a short position here, but it is something to keep an eye on as an indicator that could, in fact, lead the market to the lower levels if, in fact, we do just that in September and October, which, again, are the most notorious months of the year. So, yeah, that looks good.
Well, speaking of notorious, so we've got one of our long-term members, Jazz, and Jazz is in the chat saying, is this the beginning of a larger sell-off? So you know what, that kind of leads me into what I was going to say next. And sticking with ETFs, AJ, option traders seem to be bracing, what I mean is the retail option traders seem to be bracing for a tech sell-off, or at least they're learning to hedge, as they are grabbing insurance to protect themselves from a potential plunge in technology stocks in the coming weeks, according to Bloomberg. So AJ, check out this chart. Invesco says traders are buying disaster puts in the triple Qs, which tracks the NASDAQ 100, as we know, to hedge out an impending downturn. AJ, can you look at this chart, and with this knowledge that we know that investors are starting to add to this position is from the downside, and let us know potential option hedge that you might like?
Well, right now, our members do not have positions, at least through our services and publications. They don't have any longer-term put positions in the major market ETFs. However, if you have been following along with our channel long enough, you'll know that I often talk about pin pressure. I years ago wrote a white paper for the Market Technicians Association that was published, and I took a theory which was maximum pain theory. If you option traders who are interested in looking that up, you could see that it was originally a theory, but I found that that theory was in fact a leading indicator to the market, because it was proven over time that prices, especially in the major markets, tend to gravitate to the strike prices that have the highest open interest. Now, you don't have to be an option trader to figure this one out, but I'm going to show you my option screen here and give you the details. You see, this is an option screen that's pretty much a glorified Excel spreadsheet, and we have calls on the left and we have puts on the right. And this report, that the way we have it set up, shows the open interest, which is more or less the concentration in trades at those particular strike prices on both calls and puts. So what I did in the pin pressure indicator that I developed, you take these columns on the calls and the puts and you add them together. And we found that stocks have a tendency to gravitate to the strike prices that have the highest combined open interest. So if we were to do that, you don't need a calculator to do this. You could just look to the left and say, oh boy, look at that. Look at the open interest on the calls at the 560 level, and look at the open interest on the puts also at the 560 level. So we have roughly 67, almost 68,000 open interest contracts at that strike.
So what does that mean, AJ? What does that mean?
It means that the professionals want the price to go to that, because the option traders who take the opposite side of most option trades from the general public will have to hedge themselves. So when they sell a call or buy a put or sell a put, whatever it may be, they're hedging, and according to the open interest will tell us that their most profitable area for the Qs is going to be right here at 560. You see that? And so we came very close to that today. And if you look down below, the CCI down there is crossing below the zero line on the CCI, which is also known as the momentum line. So I think by September, now we do these recordings, of course, but right now, those who are participating, this is a live broadcast, and then we record it, put it on our website. So you can go back and check this later on if you like. But the third Friday of September is options expiration week for the monthly option. And if you look at what we have right here, that support level right there is right at the 560 area. So I think we could continue going lower on the Qs, and then we'll have to see what happens after expiration. Now, if you are interested in learning more about the pin pressure indicator and how that all works, on our website, we have the document ready for you to download. So we make that available to our members, and we even make that available to the general public. So we could even put the link in the description box of this recording as well. Yeah.
Got it. It's in there. All right, so AJ, let's do some strategy time. All right, so last Friday's weekly market report, you highlighted our trade of the week, which we also covered last Wednesday in this call, which is a long position in Apple calls, which I'll show now. So Anthony, if you could, there you go. This is what I'm talking about. You showed this to all of our members and everyone in the community of the exact of how you got to where you wanted to go and the profits that were made. So what I wanted to highlight is once the trade played out and we saw a hanging man. Them Lindsay also pointed out that he looked at the charts and saw that on lower volume. Many of us closed on, and some members sold in the money call spreads with the idea that buying them back cheaper as they watch the charts. So what I wanted to cover, AJ, is just because you sell out a long position doesn't mean that the trade is over or that you missed the trade. There are other pieces of the trade that you can do. So can you talk about that holistically and let our members know what you're thinking?
Right. Now, as you saw from last Wednesday's report, when I put a target on a stock, I draw these diagonal lines. Most of the time, they're in 45-degree angles to more or less keep in line with previous up legs and down legs. And then I leave those target lines on there for our members, especially because if we put out a publication on a stock like we did in Apple and they decide they're going to take a long position, it doesn't mean that you have to get out exactly at that target price. But it does mean that once we hit a target, especially when it's moving in your favor, you have to get proactive in protecting those profits. So right now you see that the trade is pretty much over, but look at the volume on Apple today as you look at this big red candle. So we see the volume increasing. Let me zoom that for you. We see the volume increasing. So for Apple, I would say we still have a little bit more downside to it. And then once the volume drops, we might see a little bit of green, maybe a little bit of a bounce for those who are looking to bottom fish and maybe try to pick a bottom there. But what I see here in Apple is actually the possibility of a ABCD pattern. Here at the top was the pivot A. We have not found a B yet. The only way I could put a B right here is if tomorrow or in the days that follow, we see a higher low, higher high. Then we could put a B here, and then we'll see a little bit of a bounce most likely. But then when it starts pivoting lower, we could then put a C, and that generally means that the price is ready to gravitate to a lower D, which in fact the D is lower than the previous B. Now I drew a lot of lines on my chart there to give everyone that reference. But we're seeing that not just in Apple. Now, thanks to Will, I mentioned his name in the beginning. If you don't mind, I'll bring that up.
Please.
This was to the downside. Will mentioned MU and wanted me to put a price target on there. And we'll see if we could put a link to the timeline and when we talked about this when Will brought it up. I don't know if Will's in the chat right now. But right here, I pointed out this red candle being very close to a bearish engulfing. And that's where I drew my diagonal line. You see the red line that's buried in this price action. And it did, in fact, go and form an ABCD pattern, just like what I talked about. Here is the A, the pivot lower, right, on this green candle. Then we hit the bottom right here. And on this green candle, I now can put a B because we had a higher low, higher high. You see that? And now what do we have? Today, not only is it hit the target, but now we have a lower low, lower high here, which means we could go a little bit lower and then maybe another bounce. So this, thanks to Will, I don't know how many people traded this one because we did not put this out as a trade publication, but if anyone did trade MU to the downside, you got Will to thank for that one because he's the one that brought it up. And I think we have some ticker symbols coming up in the chat as well. Maybe we could look at some of those. But Nod, we did the same thing with Tesla, if you recall.
Yeah.
We did have an upside target from the midweek report prior to last week. And look at that, hits that target perfectly. And then last Wednesday, what did we see? We saw the shooting star right here. See that? And I even drew it out for you. I said, look, a shooting star is a little body candle that has a long shadow on top that's 1.5 to 2 times the length of the body. That's what I pointed out last Wednesday. and then I drew the downside target, and look at that, perfectly hits the target today. On Friday, it missed it by, I think, 2 cents, if I'm not mistaken. But today, it officially hit that downside target. And so that's what we do. The analysis is exactly the same on every chart that we look at. The only thing that is changing, thanks to all of you, is the ticker symbol. So if you can learn how to read the charts using that 7-point trading checklist, you're most likely going to increase the probability of your targets hitting as well. And I really enjoy hearing from our members and from our viewers and the success that they're having as they learn how to read these charts themselves.
We'll take this off script because AJ, it seems that people like to, hear things on the fly, put their tickers in. And for those that are not members, this is what we do every Wednesday. AJ fields and forecasts at least 50 of your tickers live. They're not his recommendations, but he takes them in and he fields and forecasts them. And then during the rest of the week, during our verticals, AJ puts out different ideas, which we call trade notifications. So if you like it, come on in and give it a trial. AJ, if I could throw a couple tickers at you just from the chat, I'd appreciate it.
Yep.
Kyla, she says that SLV got down to 33.58, and I know you publicly talk about what you do in silver. It got down to 33.58 in the pre-market. Did you happen to buy more SLV then?
Kyla, you're absolutely spot on. That's exactly what I did. And in fact, I had Anthony, who's running the show behind the scenes here. He and I were both buying SLV this morning, and I did not want to miss out on that one. And but I bought it all back. I make this very public. I didn't make the trade known on X because it happened so quickly, but I did put a publication on X that follows my hashtag AJ SLV and I had this target here. And so what I did, I had sold 10% out of my position. I don't sell much of it, but I sell 10%. In little increments. Maybe I'll go to 20. I'll go to 15%, possibly 20, depending on the signals. But I like to stay the majority of the position in SLV. So when I sold out at the highs, I generated cash. Okay. And then what happened is yesterday, I took all of that cash, bought more shares down here, and even more today on that bullish Harami. So I now wind up with more shares than I've ever had in my life. Every time I sell out a little bit, my goal is to buy more on the next pivot or bounce off the support. And each time I go in for that next buy, the position gets bigger and bigger and bigger. And, I'm putting my money where my mouth is when I tell all of you, I think silver can get to $50 and I think it could even do it by the end of this year. And then once it gets over 50, that's all uncharted waters. We don't know what's going to happen from there, but I'm pretty excited about silver, especially when we look at the inventories or the lack thereof of supply and the demand on the industrial side. And then when you start to throw gold into that picture with a possible, linking of our treasuries to, or the bonds to the gold, that's some of the talk that's going out now. Who knows where the precious metals are going to go? Now, if you don't have a whole lot of money in your account, you could also look at some of the cheaper mining stocks. I'll just throw this one out there. Look at AG, right? Here's one. If you want not, I'll put a forecast on this one.
That's a great channel. Look at that channel, AJ.
Yeah, well, I've been looking at this channel, and our members, our equity traders, get in and out of this one periodically, and it's in a perfect sideways channel here. And today, in fact, we have a bullish Harami. So if I were trading this, I'd be looking to buy it around 8.5, and maybe I'd pop it out, just trading it or even parlaying it. I'd probably look to get out of some of that at $9, maybe $9.30 or so. If I get out at $9.30, I'm getting almost 10%, 9% on my money if I sell it out at the resistance. And then guess what? If it gets up to resistance, there's a good chance it'll pull back from resistance. And then guess what? I look to buy it on the next bounce off of this channel support level. I mean, this is what it's all about, folks. Now, understand, we're not talking about investing here. This is not investing. This is trading. And they don't teach this in any of the universities. They don't teach this actually, they do teach it in some high schools. In Orlando, University High School invited me to teach their economics class how to read the charts. through their teacher, Vince Roshink, I recall years ago, and the kids gobbled this up. So if you're learning it, feel free to pass it on to the people in your family, especially who you care about most, because this is nothing more than reading the roadmap, picking a direction, getting invested or trading in a stock, and immediately putting some type of protective strategy on top of that. So let me give that to you right here. Let's say you buy it at 850. Where would you put the stop? I'd probably put it somewhere down below support. There you go. And giving that stock a little bit room to breathe. And if it goes up and I sell it, what am I going to do? I'll buy more shares like I just did with SLV on the lower level. And that's just one stock. There's a lot of other stocks like this one, maybe not as cheap as First Majestic is at 8.5, but we also look at Pan American Silver, ticker symbol PAAS. I'll throw that out there, but I'll only put one forecast out on AG. There's one, looks a little bit like a flag pattern, right? Look at that. You know what? You want to see what a flag pattern looks like? Here's the flagpole, and draw the flag. I think it was last month I drew the flag pattern on one of the weekly market reports. But there it is. If you get a breakout over the top of the flag right there, a bullish flag tends to rally in a move that is equal to the length of the flag. Now I'm going off my charts here by drawing that. But if it breaks out over the top of the flag, you've got Pan American Silver potentially going up to 35, which again is better than a 10% move from where the stock is right now. Now, that's just equity trading, folks. When you throw an option strategy on top of that, like what we talked about with Tesla, holy mackerel, you could take a 10% move in the stock or an 8% move in the stock and turn that into a 100% move in an underlying option that you're trading in that stock, right? So going back to Tesla, remember, we had a downside target on that after the shooting star. What is that? I don't know what the percentage is, but you had a 12 that looks like, a $22, $21 to $22 drop in the stock after we talked about it. That's not even 10% of the stock, but you could have easily made a lot more of that in percentages. I'm not making an income claim. I'm just stating a fact that the options are leveraged. You have to be careful before you just start jumping into options, but they are leveraged, and you could use them as trading instruments just like you're trading cheaper stocks. The only difference between trading a cheaper stock and trading a cheap option, whether it be a call or a put, is that the option eventually expires. The stock does not expire. It just keeps moving on. Yeah, that chat. Look at that chat, Nod.
No, we're blocked. Listen, I want to stay off script because you know how comfortable that makes me. But our friend Tafe, who asks questions the right way, Tafe is bulled up on Regeneron, REGN, and Tafe said that they feel that it's ready to pop because if you're looking at the weekly chart, there's a rotation into higher volume. Can you give your on the fly look at Regeneron?
I like that one. I like that. Now this is the daily chart. Okay, let me switch to the weekly chart so I can see what the reference is here. And I would be very careful with that one, only because the price has just broken out over that 20-week moving average. And with 2 days to go in this week, I'm not quite sure that volume is going to be last week's volume. That's a very big leading indicator that we talked about. I think it was 2 weeks ago on the Technical Tuesday educational video series. So with the volume dropping, I would not be a buyer on that, whether it be the weekly or the daily. However, if you get a pullback to that moving average and then a pivot or a bounce up over that moving average, now that would get my attention. Right now, you got this bullish engulfing. You got a resistance area up here, so it doesn't look like you got too much upside, at least not yet. However, because this is a higher price stock, this would be a prime candidate for option traders who are looking to maybe sell vertical spreads to collect some cash. So in other words, I'll give you an example here. Let's say that you want to put a bullish play on this one, but you don't want to put on too much risk. You can go out there and maybe sell a $5 wide or a $10 wide out of the money put spread, take in some cash and bank that cash on a bullish candle. I can't get too far into the details without giving a recommendation here, but that's something you definitely want to look into. But yeah, these are great stocks to be trading, and they're all following the technicals very, very nicely. Yeah.
All right,
You see Mike Bennett in the house. Welcome, Mike. What about a leap in AG? Yeah, I would go with that too. Go ahead.
Speaking of following the technicals, AJ, we have 3 different verticals in which you send out 1 to 2 weekly trade publications. You're constantly looking at highlighting opportunities for our members. I've got up on our screen right now just kind of a list of what you get with different services. So AJ, without giving too much away, I wanted to see what you could share with everybody here today on what you saw in the long call opportunity in Salesforce, which is CRM. That was out last week. And then maybe one that was put out this week, which is in Genie, Geni. I can put you on the spot.
Yeah, no, like I said before, when I draw my my target lines, I draw them in angles like this. And what I was looking at for our members and why we made money in this one is that we saw that bullish hammer. I mean, that is just textbook bullish hammer. And again, for those who are joining us first time, here's another hammer candle. A hammer is actually the opposite of a shooting star, like what we saw in MU last week. A hammer is a small body. It's like a little rectangle with a line known as a shadow beneath that candle that's 1.5 to 2 times the length of the candle. It's usually found at the end of a downward leg. So there's a perfect hammer. And look what happened after that one. Now, this one was also a hammer followed by very close to another hammer. So getting in on that one was, for me, pretty easy call, because if you take out your trading checklist and you look at that, we measure the buy versus sell signals, right? The hammer candle, there you go. That was a bullish candle. We did see a drop in volume in here as the stock was dropping, so that was bullish. We saw a wide divergence from that moving average. That was a no-brainer bullish, right? Gino's in the house here. He's big on the no-brainer signals. And then we also had a gap above the market, which acts as a price magnet. That was bullish. And then the oscillators, look below. The oscillators, both of them were giving buy signal. So we had 0 sell signals there. And that's what I like to look for when we're getting into a trade, either on the buy side or the sell side. Now, remember, the overall indicators are still pointing lower, but we're taking bullish positions. You see where we're going with that? There's nothing wrong with having a long-term outlook that's bearish, but then looking at the signals on individual stocks and acting on the bullish signals and taking long positions accordingly. But look at that. It hits my target precisely at this role reversal, which was former support here, now turning into resistance. And I would not be surprised at all to see this stock start dropping down from here. Not at all would that surprise me, not one single bit. Now, the other one that we took a position in was, refresh my memory on that one.
Geni.
Oh, yeah, that was Genius Sports. This was to the downside. Now, I still have a longer-term downside target on this one at $10.32. But here's another bearish. If you take a trading checklist, I won't draw it for you. I'll just announce it. You have a hanging man, very close to a hanging man, shooting star. All of those are bearish candles. So there's a bearish top, no doubt about that. And now we had the volume dropping on that high. Look at the oscillators. They were overbought. CCI was crossing with a sell signal. We take a short position on that by buying the puts. Once the stock drops, we pump out the puts. We take our profit. We run. And we don't look back at that stock for a little while because we don't want to overtrade it. And I scour the markets during the day for trade, I guess you could say, candidates. And I put my own little list together. And then I go back when it's time to put out a publication. I pick the best of the best. I don't try to trade all of them. That doesn't make sense. I'll take the best of the best and then pick that one, and I'll put the publication out on that one. Rob from Indy said, Genie working. I got in the puts. Way to go, Rob. Thank you for sharing that with us. Yeah, Tim, we're going to spare you on the bond discussion today. He's our resident realtor / loan officer, so we're going to give him a break on that. But we'll be bringing you on soon enough. In fact, we should commit right now. What do you think? Nod, should we make the call and invite Tim next Wednesday? We'll reach out to you, Tim. We'll talk about
Tim
that.
is always welcome. Always welcome.
All right. We never had a third-party guest yet, at least not yet. That should be interesting. We'll expand on our storyline here. Go ahead. Now, what do you have for me now?
I was just going to say, for swing traders, momentum traders, spread traders, when equities and options, we try and find something for you here. We do hope that you'll take advantage of our free content. AJ goes out of his way to put content out on Friday. He does his teaching Tuesdays, technical Tuesday. We do this on Wednesdays. We try and provide a lot of opportunity and insight into the market. We just want to make sure that we're growing our community because we want to help people. I'm really glad everyone's here. Thank you all so much. AJ, you want to give some final parting words?
Folks, just keep your eyes on the charts, keep your stops in place, and stay tuned into Sticky Trades. We'll do our very best to give you the information to help you make more money in this market. Thanks for joining us. Take care.
We'll see you at 6.